Premier Explosives Limited Q3 and 9M FY24 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta. Thank you, and over to you, sir.
Thank you, Viren. Good afternoon, everyone. I, on behalf of Stellar Investor Relations, welcome you all to Premier Explosives Limited Q3 and 9M FY24 earnings conference call. We shall be sharing the key operating and financial highlights for the third quarter and 9 months ended December 31, 2023. We have with us today the senior management team of Premier Explosives Limited, Mr. T.V. Chaudhary, Managing Director, and Mr. Shrihari Pakalpatti, Chief Financial Officer. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance have already been emailed to you. Now I invite Mr. Chaudhary to share his initial remarks on the company's performance for the quarter and 9 months. Thank you.
Thank you, Vishal. Good afternoon, everyone, and thank you for joining the call. Premier Explosives continues to deliver on improving execution run rate apart from the past quarter, which saw a dip in revenue due to the geopolitical situation in Israel and around. We believe this will be corrected to the large extent in the current quarter. Having said that, for the 9 months of financial year 24, we continue to post robust growth of 64% in defense segment revenue. In terms of order inflow and backlog, we started financial year 24 with an order book of almost 521 crores and added to it new orders of rupees 731 crores in the year till date. Our current outstanding order book stands at approximately rupees 1,026.6 crores, a strong growth of 71% year-on-year, and translates into 5.1 times of our financial year 2023 revenues. Execution of these orders will help us to bid for bigger and better orders from Indian defense industry as well as from the foreign defense entities. Execution update of key orders side. The countermeasures orders are under execution at various stages and expecting the commencement of billing from March 2024 onwards, subject to the clearance of user. Significant portion of billing will be during financial year 24-25 against these orders. Other orders from overseas, Bharat Dynamics and other PSUs and other large corporates, Indian corporates, are being executed as per the timeline. In addition to that, we have different types orders from various entities, and export orders for defense products alone is currently standing at rupees 124 crores. We have successfully completed design and development for various international clients, establishing dedicated production lines for bulk production. Future outlook of Premier Explosives Premier Explosives is the only qualified Indian company for countermeasures and the only Indian company which is in the export of assembled rocket motors. In addition to the rocket motors and warheads, and now Premier has entered into manufacturing of mines and ammunition as well. As I have mentioned in our last conference call, bulk production of Nippon mines has started, and the first installment of these will be offered for pre-dispatch inspection in the fourth quarter of financial year 24. Premier has successfully completed the development of 40 mm HEAP and HEDP ammunition for UBGL and HBGL under BCPP program of DRDO. Now, we hope we will participate in the RFPs being generated by paramilitary forces and Indian Army. And we expect the production and supplies to start in the current financial year itself. And in addition to this, the HMX and RDX plants and high explosives plants, which were earlier producing for self-consumption and also for domestic market, started exporting. More and more export orders are coming, and then we expect a big growth in this area in the coming year. Premier has also completed the bulk stock tube production plant, which has come into production, and we are expecting a good contribution from this plant in the coming year. In terms of cash flows, we have generated healthy cash profit of rupees 4.7 crores in the quarter ending for quarter 3 financial year 24 and rupees 30 crores in 9 months of financial year 24. Along with steady execution of run rate, coupled with the inherent features of our cost structure, it is set to increase operational leverage in our business, leading to enhanced cash flow generation. The improved cash flows will be utilized to strengthen our balance sheet. We continue to remain optimistic about the defense and aerospace industry and will continue to work towards becoming a prominent player in the domestic as well as export space. Now I request Mr. Srihari, our CFO, to share the financial performance.
Thank you, sir. Good afternoon, everyone. The results presentation for the quarter has been uploaded on the stock exchanges and on the company's website. I believe you all may have gone through the same. The revenue from the operations for Q3 FY24 stands at 45 crores as compared to 37 crores in the corresponding period last year, with a growth of 19% year-on-year. Our operating profit for Q3 FY24 stands at 4.9 crores as compared to 4.7 crores. The operating margin for the quarter stands at 11% in Q3 FY24. We reported a net profit of 1.7 crores compared to 0.6 crores in last year's similar quarter, with a growth of 190%. Let me take you to the 9 months performance. The revenue from the operations for 9 months ended 31st December 2024 stands at 185 crores as compared to 150 crores in the corresponding period last year, translating into 24% year-on-year growth. Operating profit for 9 months FY24 stands at 43 crores as compared to 18 crores in the corresponding period last year, which saw a robust growth of 145%. The operating margin stood at 23.5% in 9 months ended 31st December 2024. Net profit in 9 months stood at 21 crores compared to profit of 4 crores in last year, which showed a tremendous growth of 394% year-on-year. Now coming to the order book, the company's current total order book stands at 1,027 crores, out of which the higher margin defense segment forms a majority of 889 crores, which is 87% of the total order book. Explosive segment stands at 22 crores, and service segment, that is the operational maintenance, is at 115 crores, 115 crores. During the quarter, domestic order book is at 88% and export order book at 12% of the total order book. The order book represents a solid and strong growth over the previous year. We are very much confident that our continued execution run rate, and we expect forthcoming quarters will be continuing with a growth trajectory. With this, we now open the floor for questions and answers. Thank you very much. Hello.
Hello.
Hello. Hello, Mr. Vishal. Can you hear me?
Yes, sir.
Okay.
Hello, Vishal sir.
Yes.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question is from the line of Dipen Vakil from Incred Equities. Please go ahead.
Thank you for the opportunity, sir. So my first question is on the lines of the geopolitical issue that you mentioned. So is it possible for you to give more light into where we are seeing this impact? And right now, if we are seeing an impact on receivables, so how is the demand currently from these geographies?
demand is, all the orders are in place and then we already have that. We have produced the products, they are in the inventory. Now deliveries, because of the war conditions there, initially the flights got affected, and also now that the ships also in the Red Sea are affected. Because of the deliveries are taking time. Now we find that the conditions within Israel have improved and normalcy has come. Industry is working and all those are going on. It's only a question of delivery, and we are expecting that this February month itself we should be delivering it.
So my understanding is that there's only the logistics is currently the issue for Israel geography, but not on the pricing front or receivable front. Am I correct?
Yeah.
Okay. And we expect that to be rectified, say, by fourth quarter, or it will take some more time?
Yeah. Already people started traveling between Israel and India. So goods also started. So I think very soon it will become regular and routine.
Got it. So my second question is on the lines of, sir, as a high energy manufacturer, what would be your key raw materials that you use, and how is the pricing scenario for those key raw materials currently? Like, how are the levels for versus year on year?
There are different raw materials because we are not one single product manufacturer like only mining explosives. Since we have multiple products, raw materials are also quite diverse. And right now, except some two items, most of the raw materials are all produced within the country and we are procuring within the country.
Okay. So my last question is, you mentioned some opportunities in ammunition. So what kind of opportunities are we seeing in the ammunition side? Because we are seeing a lot of participation, competition intensity increasing even from the private players. So what kind of opportunities do we see in ammunition front going ahead?
See, up till now the ammunition is either being produced by ordnance factories or being imported. So now it is opening up into private industry for producing and then supplies against Atmanirbhar Bharat. So we are focusing on the medium caliber ammunition, whereas others have established small caliber and others. So we expect that this is going to be a good area of growth.
Any order? So this is like a 1 year horizon or more than that? So is it like when can we start expecting some deliveries or execution to start in this space?
We just completed the product trials and we have completed establishing the production facility and completed the product trials. Next then comes the NCNC trials with the user and then various other checks and all those. So these things, they will take at least to take the order shape 2 to 3 years.
Got it. So that's all from my side. Thank you so much for answering my questions.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Abhishek Poddar from HDFC Mutual Fund. Please go ahead.
Yeah, hi, good afternoon, sir. Thanks for taking my question. First question is regarding the margins. If you could give some clarity, is it because of the lower defense revenues that the margins have come down to 11%? Because clearly in first half the defense revenues are much higher.
Exactly, sir.
Right.
You are right.
Okay, so sir, in the last call we had mentioned that we're looking at about 26 to 28% kind of margin on the defense orders. So that outlook remains as it is.
Yes, sir.
Understood. Sir, second is, sir, given the large order book that we have of 10.3 billion rupees, is it that our hands are too full and we would be waiting for taking another large order, or it's not like that and you would continue to look at the major orders? And if you can give some color also that in what products would you expect major orders in next 1 year and 2 years time frame?
No, we are working against procuring further major orders and doing. It's not that our hands are full. different products. This product mix keeps on changing. So we can't decide that one product, we have a big order, that means our hands are full. I have explained this in my last call also. I think, am I clear?
Yeah. So just trying to understand, given the production facilities that we have built up in Kattepalli and all, our execution has ramped up. So what key products would be targeting, where the potential is more for us to get orders?
We have bulk and also from export orders from Israel and also domestic. So what happens is these orders, when we receive the order, it takes 6 months to build up the tooling system and also components and the procurement of raw materials and all those. So after receiving order, after 6 months or something, the production starts. Then there will be pre-dispatch inspections. So all those. So we are going through that. Our capacity, there is no issue of capacity. We have enough capacity.
Right. And so in Pinaka, what is our scope of work? You had mentioned Pinaka Mark 1 and Mark 2 we can manufacture. What is the scope of work there, sir?
We have qualified for manufacturing of propellants and other energetic components, not the entire Pinaka rocket motor. But in future, if right now 2 companies are already doing that, if there is further opportunity, then we can enter that field.
Understood. So just one last question from my side. You did mention on opening remarks regarding design development for various clients, and you have established product lines. Could you give some clarity that what products you are looking at for these international clients?
So right now we are producing different rocket motors for Israel and also warheads. So what happens, one rocket you design, and then when the bulk supply you do, the related fixtures, tooling, we have to make that. Building up the sufficient quantity of fixtures and tooling for a production batch of lot of 50 numbers, 100 numbers in one batch. That is called production line building. And once you do that, then you do the mass production.
Right. So the current order book would reflect rocket motors, but fixtures and tooling is something that you would expect in future, is it?
That what we are having production orders, we have already done. It has started production. Future orders, when they come, it will be like that. When you're receiving order and developing the order, and then building this is called production line building, the tooling and fixtures related to that product. And then you produce the bulk. Right now, we are already doing that.
Understood, sir. Okay, thank you, sir, and I'll join back in the queue. All the best.
Thank you. The next question is from the line of Jahesh Shah from OHM Portfolio Equity Research. Please go ahead.
Hi. Thanks for the opportunity. Sir, my questions again relate to this problem in Israel. Can you quantify what is the extent of sales lost, and would it be entirely made up in the fourth quarter?
We have not lost any sale. The order is very much in hand.
Dispatches are getting delayed.
Yeah, dispatches
Bills are getting, we are unable to make the billing.
It's only the dispatch and the logistic delay, that's all.
Right. So if I see that, you had a second quarter, you had defense revenues of 54 crores, which has dropped to 22 crores. So entire 30 crores is what is lying in inventory and will result in sales in the fourth quarter?
Yeah. They are at different, in fact,
no, actually we are expecting this to happen, but in fact even we have received an advance because of the material getting stuck and we are unable to, because of the logistics issues. Our customers have released the advance also against the stocks. So the only thing is the matter of dispatch. That is expected to happen somewhere around February.
Right. Yeah, but the amount is roughly around 25 to 30 crores?
Plus or minus, somewhere nearby.
Okay. And just to reconfirm, your emergency orders for shaft are supposed to begin from February to August for around 500 crores. So fourth quarter would really be lumpy now because of this 30 crores and say 100 crores of the emergency shaft order or 150 crores. Is my understanding broadly correct?
No, whatever is, shifted from third quarter, there will be accounting. But again, the We are in the execution of the emergency orders are in process. It is under process. And I think we are expecting some quantities to be built in somewhere around back end of this quarter, but the coming quarter. But I think again, depending on the PDA inspections, clearance from the MODs and all, there are a lot of if and buts. But we are expecting some billing to happen in the last quarter, some billing which we have.
Okay, understood. No problem. And just coming back again on the
10 crores, but we are expecting some billings. It again depends on the clearances from the MOD and PDA inspections.
Right. And again, going back to this 30 crores what is stuck in Israel, will you experience higher costs due to freight and all, or will that be totally passed on? So is your initial margins intact, or will there be a cost escalation and lower margins?
Freight and transportation is not in our scope. Our prices are factory prices, so that is not going to affect us.
I see. Okay. And what was the actual order inflow in this third quarter?
Third quarter was, I think it was about 23 crores.
23 crores.
Yeah.
Okay. Thank you. That's all. Thank you very much and best wishes.
Thank you. The next question is from the line of Neeraj Mansinka from White Pine Investment Management Private Limited. Please go ahead.
Yeah, thank you for the opportunity. Sir, we had spoken last quarter that we'll start deliveries from February for the shafts and flares.
Little louder, sir.
So we had said in the last quarter that we'll be start deliveries of the shafts and flares in February 2024. But right now you're speaking of March with subject to defense approvals. So any thoughts on how is it? There is a possibility that there might be no shipment in Q4 itself and maybe shifted to the next year financial year. Is it a possibility?
Some quantities.
No. Sir, actually there are no timelines because actually the supplies have to be made within such a time. There are no separate schedules in between. But we are trying to make some billing in somewhere this year itself, some billing. But again, some issues like PDS and clearance from defense are subject to, every time it is subject to their clearances only. But it is a part of this billing only.
This total played in 4 tranches, 4 installments, not more than that. So we have to wait for the first installment, the prescribed quantity to be ready and then offer all together. We cannot offer whatever is ready and then clear in this financial year and go to next year. So because of that reasons, there will be always an uncertainty whether it will come in the last week of this year or it will go to the first week or second week of the next year. It's like that.
Got it. And so if you really think from the Israel issue which is happening, what we have been thinking is there would be more increase in the demand of rocket motors because of the use of consumption of the missiles and etc. So I'm surprised on the delay in the shipment. So can you give some color on the fact that globally there are a lot of shortages of the defense consumables? So any impact it can have you on a better revenues from the export market?
Actually, the export orders what we are executing were placed on us before the conflict started. So this cannot be linked to that. But about the increase in the demand and all those, I don't think we'll be able to comment on that.
Okay, got it. And the last question, you had given a guidance of 300 crores of revenue for FY24 and 500 for FY25. So does our FY24 revenue guidance continues to stay, or is it you would be lower for this year?
Maybe around 10% performance may happen.
So around 270 crores.
25 will be much better than what you were talking about.
Obviously, got it. And so last question on the ammunition on the RFPs. Can you give some color on the RFPs on the large RFP that is delayed in opening up? So any comment on that?
No, those RFPs, it is not known. Almost we are These are what we are talking of, the new RFPs coming. These are coming specifically for the made in India products. The old RFPs for the imports or foreign technologies and all that.
Okay. When do you expect the paramilitary forces ammunition orders to flow through?
See, they are in the different stages, RFI, RFP, and then user trials and all those. Now they are at the user trial stages. So once the user trials are completed, I think they'll come. That's what we are hoping. I mentioned earlier, these things to come to bulk production stage, they may take 2 to 3 years.
Right. But sir, how many companies would be probably qualified for the user trials?
Right now, this under DCP program, they have 2 companies have worked with DRDO. One of them is Premier.
Okay, got it. Thank you, sir.
Thank you. The next question is from the line of Shantanu Chatterjee from Mount Intra Finance Private Limited. Please go ahead. Hello, Mr. Shantanu Chatterjee.
Hello, am I audible?
Yes, sir.
Okay. Thanks a lot for this opportunity, sir. Actually wants to get much more greater clarity in your order book position, sir. As you have mentioned that 23 crore order inflow was there in the quarter 3 itself. But if I look after your current presentation, sir, in Q3 presentation, you have mentioned that YTD order book inflow was 731 crore. And in your last Q2 presentation, you have mentioned up to 30th September, YTD order book was 615 crore. That means order inflow for Q3 was 116 crore. Why this disparity, sir?
We will check and come back, sir. We'll check and come back.
Because, sir, if I look after that, you have executed 44 crore order book in this quarter. Your revenue, you have recognized revenue 44 crore. So last 30th September, your order book was 1,054 crore. So if I deduct that thing, so order book will come back to 1,010 crore. And if you add back 116 crore, then your order book will be in the vicinity of 1,126 crore. Instead of that, you have mentioned that current order book is 1,026 crore. So there is a 100 crore mismatch of order book, sir.
One second. 615. Yeah. 1 second, sir. Because I think there is some issue of the GST. In the 615, I think GST was excluded. I think here the GST was added. I think there is some difference.
No, sir. Actually, in the presentation itself, you have mentioned, in the both presentation, you have mentioned that order book was excluding GST.
Correct. But I think it was including GST. But anyway, we'll check on that.
Okay, sir. Okay. And, sir, what kind of order book you are envisaging for the next couple of years?
I think that it presented this will continue, sir. The trend, the way the conditions are appearing, the present trend of we'll be able to maintain this 1,000 crore order book continuously.
Okay. And sir, is there any need for fresh capex to support your upcoming opportunities?
As on date, we don't have, but we'll definitely share next time by the end of the year if there is any.
Okay, sir. I will come back into the queue, sir.
Thank you. The next question is from the line of R.K. Ladda from Yes Investment. Please go ahead.
Good afternoon, sir. Thank you for giving me the opportunity. My doubts have been cleared in earlier question, so now no question from my side. And all good wishes for your future. Thank you.
Thank you.
Thank you. The next question is from the line of Kush Nahar from Electrum PMS. Please go ahead.
Hi, sir. Thank you for the opportunity. So I have 2 questions. So one, would it be safe to assume that our current order book of 1,026 crore will be executable in the next 12 to 15 months?
So significant portion will be executed in next 12 months, a significant portion of that.
Okay. And so the second question is that tax rates have been on the higher side for the last couple of quarters. So are we trying to shift to the 25% tax rate going ahead, or this will be maintained?
Earlier we used to have some MAT. Earlier we used to cover under MAT and we had some credits, and now we are coming into the regular tax kind of thing.
So we can say from quarter 4 it would be 25% only?
Exactly, yeah. So we are gradually moving to the 25%.
Okay. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Shubham Upadhyay from the Microcap Minute. Please go ahead. Hello? Mr. Shubham Upadhyay? Hello?
Hello. Can you hear me?
Yes, now you're audible.
Yeah, sorry for that. Good afternoon, everyone. Thank you for the opportunity. I'm Shubham Upadhyay from the Microcap Minute. So basically, most of my questions have been answered, but I wanted to ask about the operating margins, which have been a little bit under pressure for this particular quarter. So when do we see that those margins coming back to the quarter 2 FY24 level, that is the 28%?
Understood.
I think you want to this 28% margins how we will arrange it. Sir, actually this depends on the product mix and the segmental revenue. Normally, if the product mix depends on the product mix, since we have got so many products, so some products are giving good margins. Some others are not giving that much margins. Second part, as you are aware that I think we have got defense segment, wherein defense is comparatively performing well. So again, the performance of every quarter depends on the segmental revenue as well as the product mix. So it may vary. So first 2 quarters was good because of the product mix and segmental revenue.
Okay, so my second question is like a lot has been asked about the Israeli conflict. So my question is a little bit more specific. Do we see some kind of revenue contribution in quarter 4 from the Israeli conflict? Like, do we see there has been billing issues, right? So do we see any revenue contribution if that billing issues get resolved in quarter 4 FY24?
Yes, please. We are expecting all the shortfalls of third quarter will be made up in the fourth quarter.
Okay. Thank you. I will rejoin the queue.
Thank you. The next question is from the line of Prathamesh from Pro Invest Nirmiti. Please go ahead.
Yeah, hi sir. So even I had a question on the order book. Can you just clarify like whether we have lost orders this quarter? And also, if possible, if you can just check the PPT, and if there are any changes, can you just share the revised PPT on the stock exchange? And my second question is, apart from Israel, do we see any other opportunities for export in the defense segment?
Yeah, we are already exporting, and then some more opportunities are also in pipeline.
Yeah, and the first question, like, have we lost any orders this quarter?
No.
Okay. We have never lost any order once in hand. Once we have received, we have never lost any order.
Okay. And in the earlier participant question, you said that you will maintain 1,000 crore order book comfortably. Now after we execute the shafts and flares order, I guess the order book would be down by 500 crores approximately. So, do you see any large orders in the near term, let's say in the next 2 quarters?
We look at the shafts and flares itself as a regular continuous uptake will be there. May not be of 550 crores every year, but yes, 300 to 400 crores will be there. In addition to that, I told we are adding the mines and ammunition and also RDX and HMX exports we started. So all those things together, we believe we can maintain that.
Okay. So 300 crores is what is required annually by the IF. So can we assume that?
Sorry?
For shafts and flares, like the annual requirement is around 300 crores for the IF. Like, is that assumption correct?
It is only an assumption.
Okay. Okay. Yeah. Got it.
Thank you. The next question is from the line of Nikhil Jain from Galaxy International. Please go ahead.
Yeah, thank you for the opportunity. Just a couple of questions. So one is, let's say, given the current geopolitical situation, is there any tailwinds that you are seeing in terms of defense preparedness by different countries and geographies, and hence an increase in inquiries for yourself?
Yeah, we are seeing a lot of activity. We are getting queries and all those. Yeah, from Europe also. It's not just Israel alone. We are getting queries from different areas of Israel. And we are also exporting, like we mentioned, RDX, HMX. Demand for explosive raw material also has gone up.
Okay, that's great. And the second thing is that, so besides the ammunition part, is there any other new product that you are currently, let's say, working on and which has gone into commercial production zone?
Like we have mentioned, we are doing high explosive components, high explosives for different UAVs and then rockets and missiles and all those, where we are not the direct prime vendor, but we are sub-vendor to other corporates. So those activities are continuing. Those also should significantly contribute to the growth.
Okay, fair enough. Thank you.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello, sir. Good afternoon. So, based on the previous question about the revenue for FY25, so you said based on the order book we have, significant portion will be executed in 12 to 15 months. So, is it fair to assume the revenues could even be higher than 600 crores?
I think we should reach in and around that.
In and around it, okay. And these EBITDA margins, so it was covered, but again, just to clarify, based on the order book you have and the kind of orders in it, you might get an idea, right, that if we can sustain the 28% margins quarter on quarter, so that we can, end the year with those kind of margins as well for next year?
So again, as we have been explaining, the margins depends on the product mix and segmental revenues. So this, I think we are, it's not that we can just say 28% or 20%. So you can see the good margins in first and second quarters, and there are some low margins in the third quarter. So we have to see going forward, let us see, and it depends on the product mix only.
But that's what I'm asking. So based on the kind of order book and the orders on hand you have, you can't, get an idea if the product mix will...
20% is what we expect on average.
18 to 20% quarter.
Yeah.
Okay, sir. And you said the loss we saw, like not exactly the loss, but the impact we had in quarter 3 because of the Israel situation will be recovered in quarter 4.
Yes.
Oh, okay. Thank you and all the best.
Thank you. The next question is from the line of Mithun Aswad from Kiva Advisors. Please go ahead.
So, just wanted to understand, your over 1,000 crores of order book, and you mentioned that this will be executed over the next 12 to 15 months. So, do you see a significant jump in FY25 revenue? Because at the current rate, we would maybe end the year in the 250 sort of crore mark. So just wanted to understand, is there any sort of number that you're looking at in terms of revenues in the next couple of years?
We mentioned the significant portion of the order book, but not all the order book, because there are some long-term orders also. So there is as in the previous thing, I think we should be able to execute some near and around by 600 crores.
Sorry, sir? 600, is it?
Yeah, in and around.
Okay. Okay. So for FY25, we are looking at about 600 crores.
Top line plan. I mean, it's not a guidance, but there is a fair possibility.
Okay. Okay. And I'm just trying to understand what stops you from doing that? You said it's a fair possibility. What is, once you have the orders, is it that sometimes the orders slow down or something?
Calculations in the paper. There are some execution challenges that we are at. We need to address that.
Okay.
Hope you understand.
Right. And
these are different from the normal FMCG or other things.
Got it. And in terms of margins, sir, on the defense side, we would continue to, maintain the margins that we have, or with the size of orders becoming larger, is that going to be a challenge, or it depends on which products they have different margins? Just wanted to get a sense on this.
Yeah, the margins, you cannot expect the same margins all the time.
Correct.
Nowadays, and it becomes more difficult when you are a single vendor or a limited vendors are there.
Right.
Yeah, so yes, we hope to maintain the same margin.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Abhijit Mitra from Ionius Alpha Investment Management. Please go ahead.
Yeah, thanks for taking my question. The first question is on margins. I think a couple of prior participants also inquired on the same. If I look at your gross margin actually increased to 68%. So it doesn't seem to be a product mix driven EBITDA margin decline. It seems to be purely fixed overheads being higher because revenues were lower. Should that be the right understanding of looking at it? Because I could see a huge increase in your gross margin sequentially. So it doesn't seem like that any segment of the products that you have executed would have led to a lower gross margin, and hence the margin have declined. It's just that the revenues were low and fixed overheads were not compensated by that kind of execution.
That is one part. Moreover, the margins, obviously the margins in defense should be more, but comparatively, whatever is the fixed cost which have been, it has been added to the inventory number, most of the things.
Actually, this explains, if you look at our business share of defense and aerospace and industrial explosives, year on year, if you look at it, you'll be able to make out this difference. The years when we were doing more of industrial explosives, margins were lower. And once we decided we will do less and less on that and concentrate more on this, the margins have gone up. So instead of quarter to quarter or month to month, if you look at year on year, this will be clear to you.
Got it. And, with next quarter execution of this rocket motors, the entire Israeli order would be out of the book?
No, sir. That order will be there for the next 6 months to 9 months. Yes.
We are working with other requirements also. Now, presently, we are in the development stage. By the time we execute these, those will come into production stage.
Okay. And notwithstanding it being an assumption, when do you expect the next order inflow of 300 to 400 crores of shafts and flares? I mean, what is your best case? When can we expect the next order inflow of 300 to 400 crores of shafts and flares?
I cannot say that one go will get 300 to 400 crores order. It will be split into multiple orders.
I'm more interested in terms of the order cycle. So, from a conceptual or understanding basis, if the last order was placed in July, August,
so much. See, these are not predictable because these are not regular consumption or something. These things. So these decisions are taken by MOD based on their stock levels and then when they want build up. So this, like I answered earlier, this is an assumption. Our assumption based on our past experience. So probably by mid of the year or end of this calendar year, I think the RFPs may be out.
Got it. That's all from my side, and wish you all the best. Thanks.
Thank you. The next question is from the line of Rupen Masalia from RN Associates. Please go ahead.
Yeah, thanks for the opportunity. My question is, pertaining to space opportunity. because ISRO is now in the process of transferring technology, especially small satellite launch vehicle technologies to private sector. And we being, a maintenance partner of ISRO since last decade or so. So in the light of that, over next 3 to 4 years, where do you see this business, especially space-related and small satellite-related business scaling up? So that's my question.
Yeah, the space opportunities, yes. After I think 4 or 5 years, we are expecting this opportunity will grow into a bigger level in 5 or 6 years' time. And we are very much there. If you remember, we are already producing the strap-on motors for PSLV. And we are also participating in different programs of SSLV and right now that other GSLV and all those. So some we are directly participating, some we are participating along with other bigger corporates where the money is a bigger issue investment. So
would it be fair to presume that in next 4 to 5 years, this could be maybe say 400-500 crore kind of annual opportunity?
Yes, we are expecting.
Okay. Yeah, that's it from my side, and best wishes for future.
Yeah, thank you.
Thank you. The next question is from the line of Sarjit Yadav from Mount Intra Finance Private Limited. Please go ahead.
Good afternoon, sir. I have a question regarding the BrahMos and Pinaka. Pinaka, you said that you have successfully carried out the trials. So are we looking to bid for this or just keep it as one of the products where we can participate in future? Second is about BrahMos. The TOT was an induction. At what stage are we there? If you can just clarify that.
It's at a stage where I think very soon in 1 or 2 months' time we'll be into that. Because now already trial production has started. They are in the process of post-curing operations are going on in the plant, BrahMos. And the other question you asked, could you please repeat?
So, again, BrahMos, are we expecting any future revenue from... Yes. Okay.
Pinaka, you said about Pinaka.
Pinaka was the second question. You said that you have developed successfully. So are you expecting some revenues? Are you going to participate in some...
We already have an order for BrahMos. We have an order, a trial order, which we are executing now. So once that is through, we will get the bulk orders from them.
Okay. Sir, my second question is regarding the orders. Are we expecting any orders in the last quarter? Anything pipeline which is going on with the users?
With which one?
So we have 730 crore, 7 crore orders as on date. So in the last quarter, are we expecting any orders? Are we participating in any tenders, or it goes to the next year?
Last quarter, not money are expected because we have already got in the third quarter orders from BDL for Astra and this MR-SAM, which we are already executing now.
Okay, sir. Thank you. That is all from my side.
Yeah.
Thank you. The next question is from the line of Shubham Thorat from Perpetual Capital Advisors. Please go ahead.
Hello. Thank you for the opportunity. Am I audible?
Yes, sir.
Yes, sir.
Yeah, just 2 little clarifications that I needed. The first one is, can you share what are the sustainable margins for 2 of our revenue segments, that is explosives and defense? I mean, what are the margin differentials between both of them?
I think many times this question is coming. In the present competitive world, we don't want to put so much of on that margins. I think we have given enough answers and indications on that.
Got it. And second thing is that can you please share, is there any seasonality between our product mix quarter on quarter?
Sorry?
I meant to say, whether in any specific quarter is our revenue mix is tilted more towards defense. Is there some seasonality of that kind in our revenues?
So the product mix keeps changing. Segmental revenues keeps changing. Last quarter, the defense revenue was more. This quarter, defense revenue was less. It depends on the billing cycles and all.
Got it. Yeah, that's it from my side. Thank you.
Thank you. The next question is from the line of Yashi Lohia from the Microcap Minute. Please go ahead.
Hello. Thank you for the opportunity. So, I wanted to ask you, what is your production capacity now, and are we planning to expand it, given the fact that we are having an inflow of orders and the positive outlook that we have right now?
As on date, we have no plans of increasing production capacity. Present capacity is good enough for the orders in hand and also the future orders expected.
Okay. So, secondly, as you have already mentioned that with different product mix, you have different margins. So, can you give us a highlight which of your products give you the highest of your margins?
Sorry, can you repeat, please?
So, which products or which segment of your business gives you the highest margins?
Yeah, defense segment gets highest margin.
Okay. So, defense sector gives you the highest margin.
Yes.
Okay. So, are we
It depends upon the criticality of the technologies and depends upon the safety aspects and all those, the margins will depend. So, industrial explosives, there are 40 players working on that. And here, this is a critical area where limited players are there, and then a lot of, based on the technical criticality, the margins are higher in defense and aerospace.
Okay. So, are we planning to target some other segments also?
Sorry, what do you want to know? Other segments. Hello? Hello?
Mrs. Yashi Lohia? Hello?
Hello.
Yes, ma'am.
What exactly you want to know?
Yeah, so I was asking that are we planning to give on expanding on different segments, your business segments that is already there. We are, but are we planning to go on different, a little different also, defense and explosives maybe already.
So present capacities and all things are good enough. We have no plan to expand any capacities, but yes, sometimes because this is going through reverse tendering process, sometimes the others may take a lowest bid and then take the quantities which we will not be able to take because of our pre-agreements with other products. So that keeps on changing. We are still in the other segment also, that is mining segment, and also defense and aerospace. All segments are open.
Okay. Thank you so much. That was from my side.
Thank you. The next question is from the line of Shantanu Chatterjee from Mount Intra Finance Private Limited. Please go ahead.
Thanks once again. My question is, what kind of incremental revenue expectation we have from the service segment of the business?
How to answer this? You are asking about the incremental increase in the revenue from different sectors. Am I correct?
For the service segment, sir, you are reporting three different business segments, right? One service, thereafter explosives, and third one is defense. So now my question is, what kind of incremental revenue expectation we have from service segment of the business?
From service segment.
Okay. No, that is linked with the service segment, the contract value is fixed for the 10 years. But there is a price escalation clause which is linked to consumer price index. So every year, that based on the consumer price index, it keeps on going up. It can also go down also. but it is normally goes up only and it goes by that. There is no fixed increment.
Okay. And the same thing will apply for explosives. So what kind of growth you are expecting in the explosives business?
Explosive business, the prices, if you look at it, every year prices are reducing. The industrial explosives business. All India prices, Singareni all these prices. So we have to survive under those conditions by our own efficiencies and all those, and we are working because we being technocrats.
Okay, sir. And the last one, if I can actually push, that you have got multiple questions on the margin front, sir. But my question is just, can you share, sir, reported margin profile of your three segments? Gross idea, sir. Thumb rule idea about the gross margin of your three different business segments.
So it depends. It varies. Depends on the product to product. Actually, we are not doing the single product, or we are doing the multiple products. Depends on the requirements of the customers. So the margins from each product to product, even in the defense itself, just change. It is very difficult to specify the margin for the total segment.
That we understood, sir. Like your blended margin is, as per your expectation, will hover around 22 to 25%. So, and you are expecting that defense will give us better margin than the rest of the two business. So that's why we want to understand just a ballpark figure actually. What kind of margin we can expect from the rest of the two businesses?
Especially from the explosives business, sir. Segment depends on the mainly commodity prices, sir. So wherein when the commodity prices were more, so there was some pressure on the margins. But now when the commodity prices get stabilized, the margins are also getting stabilized. So it varies, sir. It is not that we can say specific percentages on that. It varies, sir. It depends on the so many other external factors.
Okay, sir. Okay. Thanks a lot.
Thank you. The next question is from the line of Khush Nahar from Electrum PMS. Please go ahead.
Yeah. Thank you for the opportunity again. So my question was on the raw material side. So could you tell us how much percentage of raw materials are imported in our product basket?
As on date, percentage of imported raw material is very, very low from us. For us. Yeah, we hardly import 1 or 2 items. That's all.
Okay. And so would it be safe to say that our supply chain for the raw material is stable within the country also, or are we facing any issues regarding the availability of raw materials?
As on date, there is no issue. We are able to get material. But in future, now you are seeing that there is a lot of increase in the space and other sectors. So current raw material facilities probably they need to increase further capacities and quantities.
Okay, so there might be some constraints going ahead.
Because in coming 4-5 years, there appears to be a steep increase in the space requirement. And India also has going more and more for Atmanirbhar India and Made in India. Domestic imports are reduced in missiles and rockets and all those also. So more indigenous production, yes, more demand for raw materials.
Okay, sir. And so just one last question. So the defense, the 87% that we have of the order book on the defense side, so all these orders would be the higher margin businesses, say 25% plus margin business?
Yeah, the defense, like we have mentioned already, defense orders are on higher side margin. Yeah, all these are defense products only.
Okay. Okay, sir. Thank you.
Thank you. The next question is from the line of Shreya Jain from Niveshaay. Please go ahead.
Hello. Hello.
Yes, hello. Yes, sir.
Yeah.
Please go ahead.
Hello.
Hello.
Yeah. Yeah, so my question was regarding the export orders. I wanted to know, will the Red Sea crisis in any way further affect the shipment of our export orders?
crisis?
Red Sea.
Red Sea crisis. Yeah, to overcome that, we means our customers, because the transportation and logistics are in their scope. So they are planning to ship more by air rather than by sea. That's what is now going on.
Okay, sir. Okay, yeah. Thank you so much, sir.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. T.V. Chaudhary for closing comments. Over to you, sir.
Thank you very much for your confidence in the company and supporting us, and for all the trust you have. And then I hope that it will continue in the same way, and then it will further improve. Thank you very much.
On behalf of Premier Explosives Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.